Honestly, anybody that bought in 21 and 22 is challenged right now, even with good debt. We're major headwinds. So, yeah, I'd love to drill down on some of that stuff because we're starting to see some of the impact of that. For example, just found out about a 700 plus unit in Texas being offered for 10,000 a door. We're talking to Texas is, yeah, I don't know of an area in Texas you can find less than 100K a door. So that's crazy. We have an asset in San Antonio, 200 unit asset on a lake. Beautiful, beautiful asset. The one next door sold for 40 something a few years ago. They're down to 28 right now, and we'll buy it if we can get it for 24. So, I mean, that's the kind of stuff we're starting to see it hit. A lot of these operators, the ones that didn't get adjustable rate debt, forget the ones that got adjustable rate debt, they're in deep,
Yep.
right now. They got the 3%, now they're at 8 or 9%. And even the ones that have decent debt because expenses have gone through the freaking roof, taxes, insurance, and payroll. I teach this stuff and I teach 50% expense ratios. And candidly, it's hard to find anything less than 60% right now, and some are as high as 70% because all these expenses have gone through the roof and occupancy has dropped. Rents have flatlined in many of these markets and or declined.
Yep.
And we're seeing that in some of the markets that we're in. And so the water's going out. We see who's naked right now. And so that's really what's happening. But, with crisis comes opportunity. And I'm frankly excited because if you heard my story, I lost $50 million in 2008 and 9. I got crushed. And I've had a lot of people on my show that killed it in 2009, 10, 11, 12, 13, 14. And just because the opportunity was extraordinary. Well, I believe we're there again definitely in the commercial real estate space, for sure in multifamily, and even a little bit in some of the other asset classes.